Welcome back, guys. Johnny here, and in today's video I'm going to show you my thought process and strategies when it comes to buying a stock, why I purchase them, and the benefits when using the strategy that I use. I'm not selling you anything, and I'm not asking you to really do anything but offer your time while watching this video. So I have made many purchases buying and selling stocks over the last few years. But specifically, I want to talk about some of the different strategies I've been doing over the last 6 months using Webull. And as you can see, I have many buys and not very many sells. When I sell, it is for a profit. I usually and very truthfully try to never sell for a loss. I will either average down and hold out. And the reason for that is that I never have realized losses. They are only unrealized losses. But by averaging down, I can then wait for it to go up and either sell at the price I paid, which would be like breaking even, or sell for a profit when it goes up. Now, a lot of the companies I invest in are great companies long term. It's just a matter of knowing when to buy the dip, which is exactly what I want to go into today. Now, I did make $30 yesterday using this technique and $53 today using this exact technique. So recent purchases I made on the 7th was NRZ. I bought 5 shares. Also on the 7th, I bought Whitestone REIT 5 shares, and I bought another share of LTC Properties, bought 1. Now, overall, this was about $130 that I spent. As you can see, I put in $130 here. Cash balance $128, which means that's how much I basically used. Receivable $1.04. That's basically some of the, I believe, dividends and interest I received. But other than that, let's get into the main reason for this video. Now, if we take a look at LTC Properties, my thoughts on buying it yesterday and why I will be holding out on this company for some time. Now, we look at the 6-month charts. As you can see, this company has been up at the $44 mark. Now, if we create the horizontal line at 45.73, or very close to it, there we go, you can see that it has a nice resistant level at a high point at the moment. Now, right now, it's showing a low, and it's also showing that it's hit its support limit of 38.50. And I want to get to the 52. That's about as close as I'm going to get on that. Okay, it's hit its previous support from January 29th of $38.50. Bounced up slightly to $40. Now, right there, you could have made a nice little bump if you would have bought at this trend line price and gone up a nice point from May 19th to June 2nd. You could have made 5%. Now, 5% is not a huge amount, but if you have a large quantity of position, then you would be fine. Now, what we really want to see is this to bounce and break even at a high of, say you bought it at a 40 here and you rode it all the way up to the $44 mark, right? It's a good 11%. Even if we were to take you about a month, it'd be 11%, which would actually be a good amount of profit without really losing much, because again, this is a company that pays a dividend and it is going to go up and down over time. Now, as you can see, if we were to expand this out, it has been doing nothing but going up recently due to its trend line and recent support levels of $50. So imagine if this company went up to the $50 mark, right? I think that would just be tremendous. $53. So if you were to buy even now at the $40 mark, which it still has about $1 to get to, right? And you waited for it to go up to the $53 mark, you'd be at a 31% profit. Now, how would you like to make $300 off of a $1,000 investment? Could take a few months, could take a few years, but it would definitely eventually, see itself getting to that point. Why not, right? We've had lows of $24, so for everybody benefiting off of that right now, at a $39 mark, you'd be at a 58% profit. So why couldn't you? Well, you can, okay? So let's look at another setup, because these are the kind of setups that I like to look at. And yes, it's because partially some of the pandemic, but at the same time, it's because of buying low and selling high. As you can see here, same deal. This actually had a low in March 23rd, actually, a low of, looks like $4. It is now a high of $11.96, and I got in at about an $8.73 mark. Now, as you can see, though, it's had some significant dips. And if you wait for the dip, say you watching this company at $10, it goes down 5%, then that's where you need to be buying. You need to be buying at this 5% point. As you can see, it's super low on the RSI indicator, and it's very low on the MACD indicator, right? So then if you were to buy, even if you were at the same point, you'd be up 13% right now. 13%. 13%, guys. And that's in a matter of March 26th to 5/10. So, it is some time. It's about a month and a half. But again, these are not very risky plays because of the track record it's had over the last 10, 15, 20 years, if you want to look at it. I mean, it's already past its support levels, which means if it does go down and the support level becomes a new resistant level, then it has nothing but going up. Gladstone Capital is a great company that I think anyone should get involved in. You know what I mean? And then if you're holding here and you sell some of your profits at 11, or you wait and you buy down here at a 10% loss, almost 9%, then you average down where you used to be, right? How I kind of did. I'm at $10 or I'm at 11 shares at $8.73. Even if it went down to $9, I'm still profiting if I sold. If it went past $8.70, then I'd buy more, because all I know is that it's just going to go up. And even at the $8 mark, up to $11, that's a 38% profit. I think I'm sitting on like 32% profit right now. And that's amazing. You're just buying those dips. Now I'm going to wait till it drops down again. And it's going to happen because of the recent trend lines. Say it drops another 9%, just like it did before. Very dramatically and drastically, right? Then that's okay. Then I'd be buying again at the $10 mark. And I'd ride it up to $11 or $12 again. Now, I believe I have one more that I wanted to show you guys. In this here, it was my recent purchases. Recent purchases here. Account details, bought LTC, WSR, and NRZ. So WSR. Okay, let's look into that. WSR. And my thought process on it, because I do have 8 shares now, or 9 shares actually. Okay. Now this company, I have 9 shares at $8.73. It's currently only trading at $8.63. So what am I thinking? Well, my thought process is it's going to go back up to the $10 mark, because in the recent study, it's been as high as $13. So again, I found this company. I'm going to use it. I'm going to exploit it to make money. And that's what good traders do. They find their advantages and they use them to make money. That's the thing, right? So you got your two trend lines. That was easy. I was doing it while I was talking to you. Super simple to create. You have a $13.89 support level, and you have a $4.70 resistant level. Your highs and your lows based off of the current trends. Now, if you were to buy down here at the $5.60 mark, and you sold at the tippity point here, you'd have an 82% return. 82%, guys. That's an incredible amount of money, right? But I missed it. You may have missed it. So now you wait for the dip. Dips down 11%. Maybe you buy it at the 11% mark, right? And then you let it go up. Now it doesn't look like it's gone up much from that 11% mark, about 8.5%, right? And then you wait again. And again, I'm playing off the same company time and time again. Okay, it goes down 15%. What do you think is going to happen? I mean, it looks like it's kind of stuck here, but you see some growth right here, showing signs of it going up. So even if you bought in right here at the tippity point because we missed the low, and you got in at the same spot here, that's a 20% profit based off of past analytics. But at the same time, again, this is a company that pays dividends. It's a company with a lot of money. They have a good track record of going up, not down. And as you can see, they're super low on the MACD and the RSI indicators, which is showing an uptrend. So that's kind of my basis on how you can make some money as well on some of these stocks, because what you can do is make money off of the same ones. It's nothing new and nothing different, right? Because I could trade the same company 15 times in a month and make the same amount of money off of it. Doesn't mean anything bad or really anything. So, why have your minds, on 15 or 20 stocks when you only need a couple? It just depends on how much you really want to trade, how much time you have to invest. This company was at $2.90. NRZ, which is an interesting company in its own, but NRZ is another real estate investment trust, and they're more specialized in residential and commercial REITs. But as far as their financials go, they are definitely a buy. Their price targets are high, and as you can see on this chart here, their resistance and support levels have been doing nothing but go up, which is fantastic. Okay, so again, with this company, very simple. It had a high of $17 post pandemic, basically. We're still in a half quadrant of the lower half of this company, right? So yeah, whoever bought at this point could, of course, make money by just holding it. But the point is how much more this company can make over time. Even at the $9.30 mark, which was extremely low, I think, and very, very undervalued, to basically a point that you could be at right now, you'd be at almost 20% profit just holding on to this company from these 2 points. Now, again, if you were able to sell it from here to there, you're looking at 20% from January 30th to March 18th, roughly like a month and 20 days. Then you watch it go down. And again, yes, it's all repetition and just kind of following the trends. You could set alerts, so that way when it goes up 5%, it goes down 5%. Then you can get an alert and you could buy into it. I love buying companies when they're down because that just opens opportunity for them to go up. When it goes down 8%, it goes up 13%. You know what I mean? So it's finding those opportunities when they're low and then selling and making your money when it's high and doing it over and over and over and over again, while also being able to exploit this stock for dividend payouts because it's also a real estate investment trust. That's basically my strategy on all the companies that I use to buy investment stocks. I'll look into the fundamentals as well, into how much money they make, their ratings, what the news is saying, what people are saying, a ton of stuff, equity to debt ratios, and different products that might be coming out, you know what I mean? So I definitely do my research, but when you have safe research that you're going to hold companies long term, why not exploit some of these resources and use some of this to your advantage short term while holding long term? And as you can see on this, I would say it's a lot overbought. I could definitely see NRZ pulling back even another 9-10% over the next couple months. So I'd say, you know, even if it came down to $10.15 mark, I'd say that would be a fantastic buy in this area, which would also, if you didn't notice, be pretty much along the same lines as this support level here. It's bounced 1, 2, almost 3 times, might go back again and then pull forward. So that's the way I look at stocks. Also recent news and different things like that, and earnings will basically have this company either go up or down. So I hope you enjoyed this video, insight on how I trade stocks, look at stocks, buy stocks, and what I look for when looking at the charts. Hope you enjoyed, and you guys have a fantastic day.